Hey folks, welcome to my YouTube channel, The Everyday Millionaire, as well as the Everyday Millionaire Mindset Matters. I'm joined today by a YouTube host himself, Steve Saretsky, who's a Vancouver Realtor. But in this conversation, we unpack what's going on in the real estate world in Vancouver. We touch on Alberta. We look at the global macro, what's happening economically. But before we get into that, just a reminder, please, to like, subscribe, comment. Let me know what you think of the show. And certainly let's get those algorithms kicked up so that we can get other great guests like Steve showing up for the show. Now, we do cover a lot of ground in this show, and we talk about the economics that are happening, everything from inflation to the impact of the taxes that our government is putting on us, what the LTB, the landlord tenant boards, what it means in British Columbia and Ontario versus what's happening in Alberta. We do cover a lot of ground. I think you're going to find it very interesting, particularly if you're a real estate investor. So having said all of that, let's get this show going. Listen in, enjoy. Steve Saretsky, welcome to the Everyday Millionaire. You're a returning guest because, last time we didn't finish the conversation, although it was a good conversation. So anyways, welcome, Steve.
Yeah, always a pleasure to be back on the show. I appreciate it.
I've a big fan of yours. You've got a couple things going on. You're frequent on YouTube, and then you've got the Looney Hour with your gang, and it's a frequent show. I listen to it every week. It's part of what I do. I think on Saturday mornings is generally where I do it. Looney Hour rocks. You and Keith and Richard.
Yeah.
Is that right?
Yeah, you guys have had Rich. I think you guys have had Rich on the show too, right?
Yes, I've had Rich on the Everyday Millionaire, and you've been on the show before. I've had you both on the REIN stage, and great. I love you guys in terms of what you do. We align with what we're seeing. So, Steve, you're a long-time realtor in the Vancouver area. You have done something that's pretty unique as a realtor. You've really taken on understanding what drives economy, the economic fundamentals. You look at not just Vancouver, I know that's your sweet spot, but you look at what's going on globally, nationally. A Looney Hour talks about when you guys get on there, you're talking about some real geo-macro kind of stuff. Let's talk about economy. And why don't we start, because it is your backyard. Let's talk about Vancouver. Let's talk about what's going on in the province. I can't believe they just launched this whole flipping tax. It's just so ridiculous. It makes me crazy. But let's talk about that. You had a great, by the way, your blog is awesome. You did a great blog, and then you did a great video on it. So that's a long-winded intro into this conversation. So tell me a little bit about Vancouver first, economically, and then let's talk about flipping tax.
Yeah, for sure. Where do we begin? The Vancouver market, obviously, everyone's well aware, is been on this 20-year trajectory, just higher, despite every government intervention to slow it down. Foreign buyers tax, speculation tax, empty homes tax, luxury homes tax, OSFI mortgage stress test. Like, the list goes on, and we're still dealing with today. I would call it like record unaffordability, right? And so, governments seemingly haven't been able to fix the problem. And, we'll get into the home flipping tax, but, I'd say today where we are is we had this, the COVID sort of blow off top in early 2022. We shaved off a lot of that excess, particularly in the suburbs. But ever since kind of 2023, markets kind of just leveled out and is kind of more or less bounced back. We're still maybe off the highs, but it's a pretty balanced market, I would say, in general. Like, if you're looking for like an entry level single family house, it's a pretty tight market. There's not a lot of inventory. I would say I'm personally surprised. I think, seeing mortgage rates go from 1.5% to, at one point hitting 6%, I would have expected a lot more carnage. And we really haven't seen that. And that's because, for really the last 12 months, we've been seeing anywhere from 10, 15 to 20-year lows and new listings coming to market. So the inventory has been suppressed, and it's done the opposite, right? Everybody was like, wow, rates are going up. Everyone's going to foreclose. It's going to be this big catastrophe. And it has been surprising because we haven't seen that at all. We've actually seen the opposite, which is listings not coming to market, supporting the price levels. And so now we're dealing with price levels that are off 5 to 10% from the peak, and mortgage rates at 5%. And so you're sitting here today with record levels of unaffordability.
Well, isn't it interesting that, first off, I think that to your point is that everybody expected prices to kind of come down, maybe quite dramatically.
Hmm.
But, especially given what interest rates are, but I think we got to, break it down a little bit. And first off, real estate is far more nuanced than I think anybody anticipated or really thought through. I mean, we always look at the economic fundamentals of GDP and unemployment and population growth. And certainly in terms of GDP and unemployment and population growth, we're still very strong. Although there's lots of threats of, okay, we're going into a recession and blah, 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 because interest rates are up and GDP is coming down. It's not at this point a hard landing. Lots of people are calling for a hard landing. I'm still not convinced. And then having said all of that, even if GDP does pull back, is that really going to drop prices? I don't think so. Not until rates come down dramatically. And there's a really strong argument, by the way, for rates coming down and prices following suit. Everybody thinks the opposite. We can talk about that in a minute. But when we look at what's happening in Vancouver and BC overall, Steve, I mean, we look at prices coming off absolute crazy peaks. Ontario/Toronto and Vancouver were driving the market in terms of prices. We saw interest rates go up. Supply is still not there. People aren't listing. A little bit more, I think, depending on specifically where you're at. But I know that you're really connected to, developers and builders. How's interest rates affected them in terms of even bringing supply to the market?
Yeah, I mean, I think that's like the sort of catch-22, which is, um, interest rates going up while it has like hit the demand side, right? We can see that in sales volumes. Like it's choked off the capital investment side as well, so it's choked off the supply side.
Mhm.
So we're seeing developers. I mean, the pro formas just don't work in most cases today. Um, you know, Cost of construction, while it has moderated, is still incredibly elevated. Cost of financing these projects is blown through the roof. And so we're left with pro formas that don't work, because at the end of the day, it's like the pre-sale market really isn't that strong either. And so as a developer, do you have the confidence, even if the pro forma pencils, do you have the confidence to be putting a shovel in the ground today, given the sort of economic uncertainty that we've been facing over the last 18 months? And for many developers, that's been no. And so they've been better off just to sort of sit on the sidelines. And so that comes at a time when, our country immigrated 1 million people a year for the last basically 2 years.
Yeah.
Um, and there's no level of home building that can support that level of immigration, right? I mean, I think our all-time high for like home completions, I think was like about 250,000, 240.
Mhm.
And so like, what's the ability to ramp that up? I think it's quite narrow, because the ability to get like skilled trades in abundance is difficult, right? So I just don't think we can support that many people coming into the country. Of course, you're seeing policymakers now start to say, okay, maybe we should slow immigration a little bit. But the horse has kind of left the barn.
Yeah, it's almost a case of too little, too late in terms of, even if they cut back, the lag is already there. So to your point, it's, the door open, the horses are out, trying to bring them back is going to take some time, and winding it back is the challenge. And, there's an interesting part that everybody's kind of standing around wanting the government to fix the problem. But how do you actually deal with the fact that the government is the biggest part of the problem? The tax base for developers and builders is crazy. When we look at all of it, it's government that is always choosing, it seems, politics over policy. The squeaky wheel gets the grease. It shuts down investment, which then shuts down rental availability, which then doesn't accommodate the population of people moving into the country who need to rent. I mean, it's just this crazy time and downward cycle and politics. And, when I look at what's going on at federal, provincial, municipal, like, I'm just shocked. I'm sometimes a little bit speechless. I really don't even know what to say, because there seems to be no solution. It can be a little bit frustrating. And I'm sure for you, I mean, you're doing things way differently than most realtors in the space, is that you really have taken on this whole, let's look at what's going on economically. And that's, where I come from as well. And you just are left scratching your head going, where the hell is this going to go? Given I guess the environment that people are trying to find homes to live in, retail investors, or retail buyers, in other words, people who are looking for a home, and then investors who are saying, okay, well, how can I possibly be a rental housing provider and accommodate rentals if I'm being taxed, and or the landlord tenant rules are so restrictive that I can't work with it. So it is a big quandary, and I think it's going to be problematic for a long time, particularly in British Columbia and Toronto. I don't know if you got a comment on that,
Yeah,
of how you see it.
I do. Yeah, I think so. I think over the next like 2 to 3 years, I think there's enough like supply that's kind of in the pipe, which is like it's under construction already
Mhm.
before rates basically started moving higher. So like that product will come to completion. So I think like we might be okay, I think, over the next couple of years. But I think as you start pushing further and further out, right? Like projects that aren't getting shoveled today, like they're not putting their shovel in the ground to start construction, you'll see that impact 3, 4, 5 years from now. And so I think that's kind of where the rubber meets the road. I think that it's interesting, right? Because everyone's trying to incentivize the developers to some extent to build, right? The government's finally removed GST on rental construction. CMHC's got very favorable financing. But then kind of like on the flip side, right? You've got the BC government here. I know Ontario's somewhat similar, but they've been capping rent growth for landlords significantly over the last 3 years, right? I mean, during COVID, there was no rent increases. After that, they put it, I think, at 2%, which is well below the rate of maintaining and operating these buildings. And this year they said, okay, well, it's supposed to rise with the pace of inflation, but instead of the 5% that you should have gotten, we're going to give you 3.5%. And again, like I think if you talk to any like landlord of scale, their costs are going up more than 3% a year, right? I mean, the cost of insurance, the cost of financing, the cost of hiring tradespeople and building materials to repair these buildings is going up much more than that. And so, you know, government trying to incentivize it, it's like when you come in and say, hey, listen, like your downside is nearly unlimited, but your upside, we're going to cap your revenue growth at, 3, 4%. It's just not a great way to incentivize more supply. And so I can give you like a couple anecdotal stories as well. This is more like on the mom and pop side, but like we've had a bunch of our clients that they've been landlords, like maybe they own one condo, maybe it's two. This is like retirement plays for them, and so a lot of these people just want like good tenants, right? Like they don't need to squeeze every dollar. They just want like set it and forget it. I got a 1 bedroom condo in downtown Vancouver, and so I've had some cases in the last 12 months or so where, hey, I've had this tenant in my place for 4 years. I never raised the rent because they were so good. They've been awesome. And now all of a sudden my mortgage, my variable rate mortgage, or my mortgage renewal is coming up. And I used to be cash flow positive, $300 a month. Now I'm losing $1,200 a month. And the government is saying I can't raise my rent more than 3% or 3.5%. And so what do I do? It's like, well, you're stuck, right? I mean, and so you're almost forced into a sale, or you're forced to basically, what we're seeing is landlords saying to the tenant, the only way for me to change this equation is for me to move in personally, which I don't really want to do, or I'm going to sell it. And so unless you agree to new terms, a new rental tenancy that's more in line with market rents, I'm gonna have to do one of the two. In which case, you as the tenant is probably gonna get forced out either way.
Mm.
And so, yeah, I just think it's while the rules that the government is improvised or brought in are well intentioned, I think that the side effects are quite damaging.
Well, you make an interesting point about the possibility of saying, okay, well, if you don't move out, I'm going to sell. So you have that conversation, but then you're up against the wall, because that's not to say the tenant's going to make it really easy and or appealing for a potential buyer coming in. So you take a hit. Then you have to do the math. If you got a tenant that's going to be kind of amicable, given that they have no place to move to, and if they do find a place to move there to, they're going to be paying significantly more rent. It's just, there's a no win in all of this. That when you really do the math, it's like, okay, now what do I weigh? I'm going to bleed $1,200 a month. Let's say I'm bleeding 1,200, so 14, 15 grand a year. What am I going to take for a bath on the sale if I have a tenant who is not really going to accommodate? And so it's kind of a no-win in that scenario. What's your thoughts?
Yeah, and then you've got like another scenario too, where it's like, okay, let's say you decide to go the sale route. And so what happens with our tenancy laws is they're so strict is that, let's say you got this 1-bedroom condo downtown Vancouver and your tenant's quite a bit below market rent. So you go to sell it. The new buyer, if they're an investor, they have to legally assume the existing tenant. There's no circumstance where they can say, hey, I don't like this tenant. He's below market rent. I want to put my own tenant in that I can hand pick. You don't have that ability. So now when you go to sell that 1-bedroom condo, the only buyer pool that you basically have available is, whatever, the first time home buyer or the end user. It's basically the end user. Like because like what investor is going to be like, oh yeah, I'd love to take over your below market rent tenant, but I have no idea who they are or if they're even paying regularly.
Mm-hmm.
And so you end up almost hurting your resale value because you've shrunk your potential buyer pool to who you can actually sell this property to. So again, I just think for the environment for landlords in BC is incredibly difficult. I think the pitch to say, hey, you should buy a property here, it's going to be great investment, I think is a tough sell and I'm saying this as a realtor. It's just the math is really tough. And I think it's interesting, like I said, these tenancy laws are introduced to sort of make it look like they're helping prospective tenants out there, but what you end up getting is this really unhealthy market which becomes undersupplied. You get no turnover, right? People are now in these like rent controlled units. Basically nobody wants to leave. And so there's no turnover of inventory. And so we're left with this sub 1% vacancy rate. Turnover rents, and when they do turn over, are astronomical. And part of that reason is on the turnover rents, landlords have to push the envelope because they know that I'm going to be capped moving forward. I'm going to be capped at 2% or 3% moving forward. So when this rent turns over, I got to jack it up as much as I possibly can. And that's what you see. So if you ask any tenant, is today's rental market better or worse? I would tell you, I think almost 99% of them would tell you it's worse.
100%. The LTB is, in both Ontario and BC is just so broken. And I want to talk a little bit about Alberta in a minute, but that's why we're starting to see so much capital flowing into Alberta. I mean, a number of reasons, not the least of which is a very strong economy. And in the investor pool, of course, the LTB, we don't have the same rules. There's openness. There's, it's a much healthier environment for both the tenant and the investor. But just sticking with BC a bit, I mean, we talked a bit about it before we even jumped on camera, but ultimately it's hard to be optimistic of the BC market in general. And we haven't even talked about short-term rentals. It's like the bureaucracies have taken over the world and it's really shutting us down. And I talk about that from a government point of view. It's just absolutely asinine, some of the policies, the tax consequences that are showing up. You made a really good point on your last show that you did yourself, the Steve Saretsky show, which I thought was really cool. And then you said it and I went, oh yeah, that's exactly, which is when we look at it from an investor point of view, to your point, when you look at a pre-built construction deal, the builder has to go out or the developer goes out and says, okay, we got to pre-sell whatever it is, 60%, 70% of this whole deal to get this building out of the ground. Yet mom and pops investors would in the past look at that, given interest rates and given the way they saw the market in the future, kind of made sense. But to your point on the show, I think the way you articulated it, and I'll pass it over to you, was basically you're not having end users, buy a condo in general that they're not going to live in for 3 or 4 years. They're actually wanting to look at something. They're not planning that far ahead. I got to live in something today. So all of a sudden, now the developers, on top of interest rates, are also dealing with the fact that buyers, which are generally investors, they're sitting on the sidelines going, yeah, I don't think I can do that. So by the time the government gets their head out of their ass, then there's the lag. So there's projects in the ground. Yes. How long? It's not like you just start up. It's like the government says, oh, we're going to change some policy, and that contractors go to work tomorrow. That takes time. So there's a lot of lag in all of this. So I don't know if you want to clean that whole narrative up a little bit
Yeah.
and give some clarity to it.
Yeah, no, it's a good point. So we'll kind of cover the flipping tax and the pre-sale side, because the flipping tax is it sells very well politically, right? Like, let's get the bad guys, but we have to kind of let's unpack this a little bit further, because it's such an interesting misconception about people that are making policies from outside the industry not understanding how the industry actually works. And again, you might not like how the industry works and how it operates, and how it is what it is. Like, you and I are not going to change it. It is what it is. And so the flipping tax, what it does, right? So like, pre-sales are predominantly sold to investors and not end users. And the reason for that is because most pre-sales take 3 to 4 years to complete. And so most end users, right? If you're an end user looking to move in, you don't want to wait 3 or 4 years. You want to move in within the next couple months. You want to be able to go walk through the unit, touch it, feel it, get a feel for it. You know, a pre-sale is by nature a speculative asset. It is a futures contract that you're buying a piece of paper, and the developer is going to deliver that piece of paper as a completed unit 3 or 4 years. So it's speculative by nature. So it relies on the investor pool to basically fund it. So any developer that wants to build a new condo building in BC typically has to sell 60% of the building pre-sale in order to get bank construction financing to put a hole in the ground and start construction.
Mhm.
So as a developer, you need these investors to be able to absorb that. So the investors are basically actually essentially they're funding the construction of new housing supply. And what they're basically doing today, and in the last several years in particular, is the investors are actually paying a premium above the resale price. So they're like, I'm saying we're seeing like minimum 10% markup, upwards of 20% above resale prices, because the idea is that, well, hey, in 3 or 4 years the market will go up, and so we have to charge you this today because this is how much it costs to build. So the investors are actually been paying a premium, hoping that the market sort of realizes those gains. And so now with this BC flipping tax coming in, what it's saying is, the way, again, we'll see how the legislation comes out, but my initial interpretation of it, and chatting with people in the industry, tax people, etc., is it's going to be a retroactive tax. So what it's saying is, if you bought a pre-sale contract in January 2023 and it completes in December of 2025, when it completes in 2025, that's when the clock starts ticking. So if you go to resell it, on completion, you're going to pay a 20% tax. You're going to pay that home flipping tax from the BC government. So even though you bought it before the legislation came in and you're funding new supply, we're going to tax you on that. And that's in addition to the CRA taxes that you already pay for either capital gains, or if
Mhm.
you got a history of buying pre-sales and flipping them, it's active business income. So you're now paying, you know, JT, and you're paying, David Eby. And so as an investor, it's like, why invest in pre-sale? Why invest in new supply? Like, you have really bad tenancy rules where, like, it's really not that favorable to hold on to it and as a long-term rental. But if you want to buy it and then flip it, the market outlook, for one, is not very good. And number two is the government saying you're a bad person and we're going to tax the living daylights out of you. So I actually think the flipping tax, again, while again probably well intentioned, there's a reaction for every action. There's a reaction. I think what you're going to see is just less homes getting built.
Yeah, and in the meantime, of course, the immigration, interprovincial migration, the refugee statuses of people coming in isn't slowing down. And even if it did, if it went to 50%, we'd still be way behind. And I get what you said. There's nothing that you and I are going to do about it. It is what it is. But it doesn't piss me off any less. It just infuriates me. As a matter of fact, you sometimes wonder, and I know this is a rabbit hole and I don't want to go down it, but I'll just make the comment. When we see what's going on and we hear this, you'll own nothing and be happy, in the World Economic Forum and Klaus Schwab and all of the stories, conspiracy, blah, blah, blah. I get it. But it really is hard to imagine that our government and our bureaucrats can be that stupid. Like, it's just hard to imagine.
Mm-hmm.
It's like, it has to be intentional. Nobody can be that blind, but it seems that that's not the case. So that's just my comment on it and how I'm looking at it.
I definitely agree. I mean, I think I think the writing's been on the wall for some time that it was going to go down this path, which is like, at some point, real estate prices, like, you have too much of a good thing, for the investor, let's say, too much of a good thing, which is, i.e., real estate prices going up in perpetuity. Let's say they're going up 8-9% a year. At some point, you imagine governments coming in. I think that's what we've seen over the last 3, 4, 5 years, right? Like, again, empty homes tax, speculation tax, flipping tax. Like, they're just trying to remove. I think it's just playing into the populism, right? People get shut out of the housing market. They vote for more extreme government policy, and I think that's the environment that we're playing in. Again, not necessarily right or wrong, but I think it's just understanding those dynamics. I mean, what's interesting out of the flipping tax, and this maybe my last comment on it, but I think there's a notion in the general public that there's this cohort of the market that just buys, a new home or a 5-year-old home or whatever, just buys it and just doesn't do anything to it, and then flips it for like a couple $100,000 a year later. And that's just like not the case. Like, there's just not people doing that. What you do see, like, in terms of flipping, is like, yeah, you might see a general contractor or a tradesperson that has a skill set in the industry. They'll buy a dilapidated home or a rundown condo unit, and they'll spend their weekends and evenings rehabbing this property, spending time, energy, and money, and then they'll flip it for a profit because they've put time, energy, and money, I think, as they should. That's like where I think you see some of the flipping. But like, as a percentage of sales in Metro Vancouver, it's 4%. It's 4% of the market. And of that 4, we have to ask ourselves, how many of that 4%, how many are people just relocating because during that 2-year period, there was a divorce, there was a job relocation, or a death?
Mm-hmm.
I would argue maybe half of those. So flipping is maybe, call it 2% of the market.
Yeah, maybe. And I think it goes back to what we talked about even on the supply side. When you look at those individuals, those are maybe experienced trades guys, I think, is the example you gave at one point, which was to say they go in, they work their asses off, they invest and speculate with their own money. And, and especially when you look at Vancouver and some of the dilapidated homes that are there, if they bring that back to life and then put it back into the market and list it, that's at least inventory going onto the market. Now they're going, I don't see how I can make that make sense. If I'm going to be taxed that 20%, even if you're only doing 1 or 2 a year while working a full-time job, it's just, like I say, it's nonsensical with the direction that all of this is going.
Who's going to fix up the old housing stock?
Yes, exactly. So I don't know, when we look at what's happening, when we look at LTB, when we look at what the government's doing in politics over policy, we see more and more this, this NDP socialism. It seems to be going deeper down that path. Government pay, government pay. I mean, both you and I are entrepreneurs. We're capitalists. We know that in a competitive market, guess what happens? Prices get adjusted based on what your competition's doing. And when you've got none of that, and when that gets shut down, then of course all we ever see is escalation. And I mean, that's proven over history. I'm not talking out of school in that regard. And it is really, really tough, and it's a real challenge. And so I get concerned in terms of how we as a country are looking at our housing and the problem that it's creating. We've got a federal government that just doesn't seem to understand budget, doesn't have any fiscal, I don't know, acumen. I mean, it's very, very incompetent. And I can get pretty fired up about that one because it just seems so ridiculous. But there's also the trend in terms of demographic. I've got a couple of young nieces and nephews, young as in mid 30s, late 30s. And it really is a different perspective. When I have these conversations with them, I'm kind of left, with my mouth open going, what? I don't get it. But it is a view of the world. And I don't know where it comes from or why it unfolded that way. But there is just this expectation that the government's going to fix it all. And yeah, I don't know where to go with that one other than
Yeah,
that's
no, I definitely, I understand it, right? I mean, I get it. Like, obviously, I'm in the millennial generation, so I've got tons of friends, tons of family, that are near and dear to me that are locked out of housing. And I get it, right? I mean, that social contract was broken, right? The social contract is you go to school, you get an education, you get a good job, you should be able to buy a home, raise a family. And obviously that hasn't come to fruition. But I think the reasons for that happening are not, it's not the 2% of the market that's flipping houses. It's decades of underbuilding. 30% of the cost of a new home in Ontario and BC is government taxes and fees. It's 10-15 years of zero interest rate policy, reckless, right? The cost of money is literally zero.
Mhm.
Yes, asset prices go up. The market does what it does, right? You get a lot less speculation. I just think markets take care of themselves, right? You get a lot less speculation with mortgage rates at 5%
Mhm.
than you do at 1.5. Like, 1.5%, all of a sudden there was a lot of investors in the market
Yeah.
buying a lot of properties at stupid valuations. Mortgage rates have moved up to 5%. That's taken care of a lot of the speculation itself. So I just think that, obviously a million people a year coming into the country, and really several decades of underbuilding housing, has created the issues that we have. I mean, the housing market that we have in Canada, I think it's all self-induced. It's
Mhm.
everything we have is policy decisions, right or wrong. Um, these are all policy decisions that were made.
100%. Now, I know that you and I, share a common source of research with Ben Rabideau, and I was looking at some of his most recent reports. And when you look at what's happening in terms of, condos they're still in the build mode. I mean, there's lots of those projects that are going to come to completion at some point, but you see a real spike in I would say spike, but you see a real growth, a trend that's really quite robust in the multifamily space, given CMHC rules and the ability to get financing. I mean, that's become a place that investors and or contractors slash builders can play the game. When we're looking at single family, if anything, it's trending down in many regions. So it's like, if you see the future, owning a single family property is really, if you got the wherewithal, if you've got the chops to kind of do it, I think owning any kind of single family, even if it's single family as in have a basement suite in it, a small duplex, I think you're going to win over the long term, because that single family detached, they're just not making anymore. And in reality, that is in fact the truth. Whereas you start to see the condo market, there seems to be, a number of condos available. You see a lot of what's happening in the multifamily space. Any thoughts, any comments when you looked at that research?
I'm like, I'm not like a huge like real estate pumper. Like, I do this for a living, but I'm very, I think, realistic about where the market is and the
Mhm.
risks. And you and I talked about being an investor in BC really doesn't make a whole lot of sense in most cases, but I'm like incredibly bullish on single family. I think it's just it's so obvious that, like,
Yeah.
where it's like in Metro Vancouver, you are land constrained. You genuinely have geographical constraints. There's no net new completions of single family houses, right? Like it's not like you're not like you just found a new parcel of land and you're going to throw up a new community of 400 single family houses. Like that doesn't exist in Metro Vancouver.
No.
So every single year you basically see more and more single family houses being round up and redeveloped into duplexes, townhouses, condo buildings, high rises, and recent legislation is only going to compound that. So BC government mandating multiplex on every single family lot in BC. Any lot that's greater than 3,000 square feet can build a minimum 4 units on it. And then they've got their transit oriented development density. So all these hubs around within 800 meters of SkyTrain stations is mandated to do upwards of 20-story towers. So you can see where it's all going, which is the days of owning single family houses, dirt, in these major metros, particularly here in Vancouver, is going to be it is a luxury item, and it's going to continue to be a luxury item. So I think, if you think every year you add to the population, you grow the money supply, and then you shrink the available supply of single family houses, it's like the math is right there.
Yeah, it's an interesting time, and I want to just I'm going to look through the filters, if you will, of a real estate investor. Now, you hit it when you said, earlier, is that, record low interest rates brought a lot of, and I'm going to use the term unsophisticated real estate investors into the market. It was like, okay, I'm going to get in. I've got a line of credit. I can borrow money and it all makes sense. I'm going to get rich. And my brother-in-law told me they don't really have any skills. And I want to say that as much as I'm like you, it's hard to be bullish on a BC market, and I'm not. I'm actually quite bearish. What I also know that in amongst the chaos and the confusion, if somebody has the education, and it's a little bit of a plug for REIN as well, and for the REIN community that are listening to this, stay in the fray, if you will, of this, because take that education that you have, the strategies that you're learning, and apply them, because I believe strongly that opportunities are going to continue to present themselves. And they're going to present themselves because people have gotten themselves in trouble. The less sophisticated, the uneducated have made a bunch of mistakes, and those mistakes are going to start catching up to them. And it hasn't started. It has started a little bit yet. I think by the end of this year, you're going to see all sorts of opportunities presenting themselves, even in BC. Now,
So,
that's my investor optimist look.
I can chime in on that too. I can expand on that. So I think over the last 10 years, right, when you have this raging bull market, it's like you can pretty much buy anything, and the market will carry you higher. And so you have a lot of like you said, kind of unsophisticated, I'd call it dumb money, that bought anything and it went up. So when we're talking about being bullish single family, right, I think that's going to continue to be a relatively solid investment, especially in probably a more inflationary environment. This really tangible hard asset that you can control. You're not at the mercy of the strata. Is look at Vancouver. So it's if you bought a single family house in East Vancouver, where all the population is migrating, all these young families want to be, it's densifying, it's turning over, you've done tremendously well. Then there's people that bought, pre-sale condos in downtown Vancouver at the top of the market at $2,500 a square foot. And it's what were you thinking? You were going to buy it for $2,500 a foot, close on it, pay GST, transfer tax, then a realtor fee, and resell it at what, $3,000 a foot to who? And you're going to rent this unit out for, a one bedroom for what, $3,000, $3,500 a month? Just the contrast of those two investments, I think, is quite severe. And so, yeah, I think there'll be lots of winners and losers over the next few years.
Well, I think there's a couple things that we got to come back to, which is, your wingmen, Keith and Richard, they're in that equity market. They play that game. They're very good at it. I mean, they're surrounded with the right team. They've got years of experience. It's how they think. It's their world. But most people that say, okay, well, aside from equities, aside from buying a stock and hanging on, or maybe doing some options, whatever that might be, how do I stay ahead in this environment of, money printing and the devaluation of the dollar and of inflation. And it's surprising that when we look at inflation, everybody celebrates, oh, we went from 3.5 to 2.9. And everybody, well, I shouldn't say everybody, but the Bank of Canada or the government certainly doesn't shine a light on the fact that costs aren't going down. And this is, I think, a good opportunity. And Lynette, I had Lynette Zhang on the show. She's coming up, but I don't know if you've listened to Lynette. Big fan, of course, precious metals. That's her game, but she's also studied the economy globally for a very many years. She understands it intimately. She's got, whether you agree with her or not, and I'm not suggesting that she's right, but she's just saying straight out. She goes, no, it is. I've been watching this happen for many years, and certainly since 2008, I've watched the U.S. Fed. I understand where this is going, and there is no doubt in her mind that the U.S. Dollar will, in fact, implode as a reserve currency. Maybe not. Who knows? Is it going to happen now or later? She doesn't say. But she did point out something that was really interesting. And I think it is a good lesson for everybody. We look at inflation and we relate it to rising costs, which is true. And then we hear the term hyperinflation. And the reality that people don't understand about hyperinflation, they ask the question, well, when's it going to happen? And those who are paying attention to this far more than I am say, well, no, everybody thinks we're going to wake up tomorrow and it's going to be an event. It's not that. It is the boiling frog. Hyperinflation is no different. The difference between inflation and hyperinflation is the speed. So it's a little bit long-winded in saying that when we go from 3.5% to 2.9%, most will relate it to cost, and that's part of it. But it really is more related to speed. It is the speed of which things are rising. So I put that in the conversation that I think when you look at real estate, how do you stay ahead of it? How do you actually have a dollar that's worth something, in 5 years from now, in 10 years from now, given the rising costs? And real estate in Canada has been the primary kind of way to do that. What's your options? It's not like we're being big production. Manufacturing slowed down. We're not exporting all the goods that we have that the world wants. No, hell, we wouldn't want to do that. We don't do research and development. So it is all about the housing market. So I don't know if you got some comments around that.
I mean, my favorite exercise, and I think it blows people's brains, but my favorite exercise is to take Vancouver real estate or Toronto real estate, or pick your market, and chart the prices, because the prices have gone stratospheric, right? Everybody talks about, oh my gosh, price them out in gold.
Oh yeah.
Gold, like Vancouver real estate prices, when you denominate it not in Canadian dollars, which is a currency which is clearly depreciating, but denominated in gold, which it's been money for thousands of years, right? And it's literally there. It's actually been prices have actually been declining in Vancouver. So I just think it's it just shows that, you talked about the boiling pot of water. I think we've been sort of in an inflationary environment, at least for asset prices, over the last 10, 15 years, right? I mean, the fact that we had Vancouver home prices going up 15, 20% a year, and the Bank of Canada was coming around saying, man, we're really struggling with inflation. We're only at 1.8%. And you're like, well, are we sure? How are we measuring it?
Mm-hmm.
And so, I would say cost of housing is a pretty substantial portion of one's inflationary basket, but the way that it's measured is not perfect. And I think that it has kind of disguised, I think you can see that, right? The growth in the US equity market, the growth in Canadian house prices, that's showing, I think, the true devaluation of the currency. So that's how I'd measure, I think that's important context for people that are buying real estate.
Mm-hmm.
Is how are you measuring it, right? I mean, you think about it today, why is it so hard now to not only buy housing, it takes at least two family incomes to get in there.
Yeah.
It takes, when you go for dinner, it's not $75 anymore, it's 150. You go on vacation, I feel like vacations now are a luxury item. It's is the vacation getting more expensive, or is the value of your dollar, your paycheck, just not going as far?
Yeah, it it is definitely, something. Number one, the numbers are, and I know you're built this way too. Is that a lot of what you're doing in terms of your own research? Yeah, you're doing it for yourself, but you share it. You are out there to, give people some tools, some thought process. Like get out of the narrative that our government and Bank of Canada is pushing out there, and give it some thought. Here's some things to think about. Whoever said that 2% is the right number? That's
Yeah.
always an interesting question. Let's talk about 2% over 10 years is 20%, and if you compound it, it's a little over 20%. So who said that 20% over 10 years is the right rate of inflation, and why is it the right rate? And by the way, has your income gone up 20%? A recent number that a friend of mine, and I don't want to misstate it, but in order to keep up with inflation the past 5 years, your income would have had to, and given what has gone on with the dollar, your income would have had to rise 6.9%. And I'm going, yeah, well, that number does in my head if I do the math, and I never unpacked it that far, but I go, yeah, that totally makes sense. So when you think about 20+% over 10 years, it's not a big deal to look at the charts and see with wage growth in Canada that hasn't been happening. So we have to look at ways to put our capital to work, whatever we might get, and ability to leverage it. That's the power of real estate, is in the leverage. That's all going away. So it is going to be, I think, trying times for many. And
Yeah.
when you consider, I always look at, let's say, the bottom, I don't want to say bottom, but the lower 60%, when you consider what you have to make for income to have I don't want to call it a decent, some kind of lifestyle where you can actually, call life enjoyable. Maybe we're, too many first world problems, but ultimately, you're looking at, I think, 60% of the population that are really, really struggling. Think about the service industry as a prime example. They're not high income earners, yet they can't find a place to live. And if they do, they're paying ridiculous amounts of rent. And you're seeing immigrants come in and go, I can't get a job. I can't get a well-paying job. I can't find a place to live. The streets of Vancouver used to be the place. It used to be, okay, lowest income postal code in the world was East Hastings, whatever the story was around that. That seems to be the norm across the country. I mean, I still have businesses in Edmonton, for example, and I go back to Edmonton on a regular basis. I still have real estate there, and I go back there, my business, and I'm looking around that city, and I'm going, wow, that we never had this in the past, but that's the story right across the country. I don't know if you got some comments on that, because
Yeah.
Vancouver is certainly not getting any better.
No, I think it's kind of like a little bit depressing to like think about it and say it aloud, but I think it gets worse before it gets better. I just think that I mean, Keith and my co-host will tell you this, like kind of the end of that long-term debt super cycle, right? We just keep lowering rates and lowering rates, and we're kind of pushing on this string, and I just think this is this buildup of debt across advanced economies over the last 40 years, and now it's kind of reaching the upper bounds of its ability to sustain itself. And so I just think, it's funny, like I said, the BC government, like, or the federal government will come and tinker around the edges about like housing, and we're going to fix it. And it's like, I just don't think it can be fixed
Yeah.
uh, in the next 5 to 10 years. Yeah.
This,
Yeah.
I think there's an important, something that we need to shine a light on. We talk a lot about government, and we're looking at what's happening in Ontario and British Columbia, and primarily that's because of the population. I mean, when you look at Saskatchewan and Manitoba, great provinces, by the way, but you're looking at 1.2 million for 1.3 million, whatever it is, for the entire province.
Mhm.
So they don't really register in terms of impact economically in a meaningful way. I mean, it's important to them as a province. When you look at what Saskatchewan's doing specifically, they're doing a pretty good job. Mo's doing a great job. When you look at, and you and I are both quite bullish on Alberta, given the not only the economy, but the impact of leadership. So we look at what's happening in Alberta. We look at Danielle Smith. I think that personally, I think she's doing a great job. She's got a lot. She has a big mess to clean up, no doubt about it. Conservatives haven't been perfect. Jason Kenney was not awesome. Before that, Rachel Notley. But when we look at Alberta, we can be pretty optimistic about, and I continue to be optimistic about Alberta, uh, primarily in an investment world because of landlord tenant board. I mean, their rules are strong. Calgary's being incredibly creative. And we've had, I can't remember his last name, Joshua, he's the city manager who's looking after suited units in Calgary. I mean, I'm very impressed. I've had extensive conversations with him about what the initiatives they have in Calgary for suited units. They're opening it up. They're going, no, let's get this done. Let's do it right. They've got a great plan put together. And then on top of that, you've got leadership. And for people to not think leadership makes a difference, I I I mean, it's so blatantly obvious to me what's happening in Alberta economically versus BC versus Ontario, even federally. I love that Danielle Smith is like hammering back with the feds, keeps winning, and I think it's awesome. So we have to look at the economies and say, okay, is there a chance in hell that BC looks over at Alberta? Are they just going to continue to make it wrong? Or would they look over to Alberta and go, hey, something that's working over there? Maybe we should try that. Can we be that optimistic, or is that just being really naive and wishful thinking, Steve?
Yeah, I don't know. I don't think it's going to happen anytime soon. I think, I look at, I mean, I started investing in Calgary in 2019, but the idea there was more just like, it was so cheap and affordable, and Vancouver just kept going up and up and up. And the narrative, like in Vancouver, right, it was like, it's just going to keep going up. It's going to go up. So I was like, okay, let's just play this out. Let's just assume it goes up 10% a year, every year in perpetuity. Like, where are we? Well, we're at a market where like literally nobody can afford housing anymore. At some point, you have to think migration will flow to where they can actually have a life and cost of living. And so that was honestly pretty much the thesis. And I think oil and gas was at like the lows, and well, how much worse can it get from a sentiment perspective? And so I think that's what we're seeing today is not only like investment dollars are going there because like it's tax friendly, the cost of living is better, the numbers pencil,
Mhm.
and if you're a landlord, right, like you don't have these crazy landlord tenancy issues, and so it's just friendly. Like capital goes to where it is treated the best,
Yeah. Where it's
where it
received.
is welcomed. And right now, I like I said, I think in BC and I think Ontario, it's not treated well, and so it's flowing to the path of least resistance ultimately. And I think Canada really doesn't have a lot of options. What's interesting is like you chat with a lot of these like big developers in Canada, like where are they going?
Mhm.
A lot of them are going to the States.
Yes, that was
They're
the
built.
next list. Yeah, that was the next hit on my list is how much money is going to the US now. It's a
They're all
lot.
developing in the States because it's
Yeah.
just easier, and they're being welcomed with open arms.
Yeah.
And so yeah, it's interesting when you see some of the big players like not leaving Vancouver, but just basically slowing new projects to, I wouldn't say quite a halt, but doing a fraction of what they would normally do and deploying a lot more capital and resources and starting to develop in different markets in the US.
Well, to your point, a friend of mine who's very, very accomplished in the multifamily space has actually not done any business in Canada the past 5 years. He just shut down. He sold everything he had, pretty much everything he had in Canada at the top of the market, and but he bought nothing. But on the other side of that, he's invested heavily in the multifamily space in just weird markets in the US because he's just going for long term. He's only looking at cap rates and he's looking at the cash flow of those properties. He's not even so concerned about the upside in terms of equity, but he's in the US. And so it's an interesting, and I'm actually planning on doing an event with him for the REIN community in terms of education, how to invest in the US and look at multifamily through that lens. I think, as I recall, you had mentioned that in Calgary you built you did a small development of duplexes or something, as I recall.
Yeah.
Yeah, you
Yeah. Go
go
ahead.
ahead. Go ahead.
Oh, it was like a ground, smack down a single family house, 100-year-old house,
Yeah.
inner city Calgary. And then we built a fourplex. So yeah, it's rented out now. It does great.
For
It's
you. Good for you.
and then yeah, another one in the works. Hopefully in the next couple of years. But yeah,
Cool. Good move. Well, something, there's kind of a Patrick prediction, and I know Alberta quite well. I'm pretty confident in, the baseline of my knowledge and my experience in that particular province. So my Patrick prediction is that we're going to see some challenges in the future, probably in the next 2 or 3 years. A lot of the capital that's flowing into Alberta, particularly Calgary, a little bit, Edmonton's starting to maybe catch up. I'm keeping my eye on that. Historically, Edmonton follows Calgary. I'm not sure they're going to this time. They're total NDP. Now they're not talking. They're decided on 15-minute cities. Trudeau's in there writing checks. That is not healthy for the real estate market. The track record shows that. Having said all of that, Calgary, on the other hand, we're seeing a lot of Ontario money flow into it because and what are they buying primarily is condos. And I'm saying, Patrick prediction, many of those investors are going to regret doing what they're doing because of how they're going in. They're looking at the market at just what is the price. And, when you look at condos that you can buy in Calgary for 300, 350, even less, it's like, that's almost free. I'll take 6 of them, but there's no plan around it. And the condo market, it is changing, but it's a totally different demographic, Steve. Like if you go to Vancouver, if you come to downtown Vancouver, or if you come into Vancouver, that you're going to look at a condo, you're going to look at an apartment. In Alberta, that whole culture is not built around that. They're wide open spaces, and condo living is okay for some. If you want to actually buy a condo and live in it, great. As an investment, they don't. They generally come back to haunt investors for a couple of reasons. Number one, what we know about strata / condo fees is they only ever do one thing: they go up. Insurance continues to be a huge issue for those buildings, and so the cost of insurance is almost making it, in some cases, it is totally shut down condo boards. I mean, they're almost going broke because of the increases in insurance. So it's just a little bit of a heads up for somebody in Ontario thinking about going into Calgary and buying condos. You better be dealing with, number one, a realtor that knows what the hell they're talking about in that investment space. Because yes, there's opportunities in Calgary, but you just can't throw spaghetti up against the wall and see what sticks. You got to be very, very intentional. So just my warning out there.
yeah, I mean, I would 100% agree with that. I mean, since I've been more vocal or public about like what I'm doing in Calgary, I've had, so many people reach out from different parts of the country and say, oh, tell me more. And how do I do this? And I've emphasized the same thing. Like I buy inner city detached, land. I'm not buying condos. I'm not pre-selling, pre-sales. And I think you're seeing a lot of the money that's going in there is just blind money. And yeah, like in Calgary, right? Yeah, you just expand out. Like you don't have the same geographical land constraints as you do, let's say in Vancouver or parts of the GTA.
Mm-hmm.
So yeah, they're definitely different markets, and I think people should definitely do their homework. And I think that I will say this is like, well, I am bullish on that market over the foreseeable future. I do think it's a market that is prone and has in the past overbuilt. It's a free market, it's open market, and
Yep.
I suspect they'll probably overbuild again at some point in the near future.
I suspect they will. I agree. So let's just switch, gears a little bit here. And as we start to wind down, Steve, and you and Keith and Richard, you guys look at the global macro. You look at what's going on in the world. I know real estate's your game, but having said all of that, when you look at how are you hedging against what's going on, economically, when you see what's happening in the world, I know you guys look at China and Germany, and you look at the potential for wars in Russia, Ukraine, all the rest of it. How do you look at, how do we hedge? I look at, I follow a number of people. Jim Rickards, I'm a bit of a fan of. I like his thought process. He often talks about, the fact that it used to be, own 30 stocks was a diversified portfolio, 30 stocks in, 5 different sectors. And that was the solution to the issue. Now, now he's kind of looking at it going, some own some stocks, be careful in the equity market. I mean, really, when you look at equities, there's, the big seven that are driving the whole market. Everything else is kind of upside down unless you're a real specialist. He's saying definitely you got to own precious metals. He's hedging a little bit, but you got to own some Bitcoin. When we look at the global macro, it's also hard to be optimistic. But how do you see it, and how do you kind of hedge against it, Steve? If you want to share.
Yeah, I mean, obviously, like I'm a real estate guy, but I'm certainly I have I have guys like Keith that manage my investment portfolio outside of real estate. So, professional manager. I mean, Keith will tell you this, but like I view it the same way, which is I think you have to look at like currency risk. I think you have to look at like, okay, like look at the government that we have today in Canada. Um,
Yeah.
personally, not a huge fan. I just think like there's a reason why you're seeing capital leaving the country. And so it's like, well, what does that do to our currency potentially? Like how much risk do you want to have, right? If like all you own is just like if all you own is Canadian real estate, then you just have so much currency risk, which
Mhm.
is you're at the mercy of hoping that you have a stable, competent government, which I don't think you can necessarily 100% rely on. And so I think just having some U.S. dollar exposure is certainly one way. Um, for myself personally, I'm definitely have a lot more cash
Mhm.
than I'm maybe used to, but I just think today's environment everybody I think everyone today is looking for liquidity, right? And you talk to any developer or some of these commercial guy, everyone's looking for liquidity is the name of the game. So I think there's going to be opportunities. I think there's going to be a lot of volatility we're seeing in interest rates. And so for you, if you're running a business or your own personal balance sheet, maybe you have a 9 to 5 job, like how steady is your job? I
Mhm.
mean, are we going into recession? So I just think having more cash today in a world of uncertainty. But when talking cash, it's not just Canadian cash.
Mhm.
It's looking outside of just our country. Canada's such a small country in the grand scheme of the world economy. Like people don't even talk about Canada.
Yeah, totally. We're not even on
So
the map. We're not even on the map on the global scale.
so yeah, if you got your entire, investment portfolio in Kelowna real estate, you might want to diversify.
Mhm.
Nothing
Eh,
wrong with Kelowna, but yeah, that's just my perspective. It's
yeah.
real estate is a very important safe haven inflationary hedge, but it shouldn't be the only asset.
Well, I don't know who said it. Not particularly profound, but I'm reminded of it. It's not a debt crisis; it's a liquidity crisis, and that's sometimes what we're bumping up against, and what people are bumping up against a lot right now, which is that liquidity crisis. Too much debt, too high a rates, and oh gosh, it seems our federal government would be having that same issue, although they don't seem to think so. Anyways, as we wind down, Steve, I want to say thanks for joining me today. We would. I would love to be able to solve all the world's problems today with you, but I think that we got a lot of work to do and a lot of work ahead of us. So maybe we'll have to pick it up and have this conversation again. Folks, if you're listening to this, you definitely want to follow Steve and the Looney Hour. Great podcast. His podcast is awesome too, and as well as his blog. He's more than just a realtor. That is certainly minimizing his skills and his thought processes, and that's one of the reasons that I was really looking forward to having you on the show, Steve, and getting caught up again. So thanks for your time. Thanks for your energy. Thanks for your wisdom. It's always appreciated.
Hey, thanks, Patrick. Appreciate the kind words, and always happy to do this. We'll have to jump on again soon.
100%. Thanks, pal.